Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Thursday, September 12, 2013. Well, a continuation of the trend to the upside today, a candle that's made a higher high and a higher low, therefore continuing the trend. Having said that, however, we have a black-bodied candle, and it does raise some serious doubt about a continuation of that trend to the upside. The black body denotes the sellers making a decent amount of net bearish progress on the day between the open and the close, and actually highlights a shift in sentiment in the short-term time frame back towards the sellers from the buyers. The sellers have closed with control of this candle by closing down towards the low of the trading for the period and opening up towards the high, suggesting also that the sellers have been fairly strongly committed to taking this market lower, but they weren't committed enough to take out the previous low, and that's why the trend continues to the upside. The market has now tested back to within the window that was opened up, and there is potential for the market to find support there. It's not as strong an area as it has been previously. The window has been closed, but still they do remain as areas of support and resistance, although fairly weak now that the area has been closed. Down below where the market's trading, however, we do have the top of the cloud and the window just below there that was opened in the recent past, and we should have very strong support from 1675 down to around 1672. Now, if this market doesn't change trend, we also have the solid potential resistance once again around the 1687 level that was previous support, and that will be crucial to this market if it is going to trade to higher levels. In terms of the Japanese candlesticks, this is also a potential Japanese candlestick reversal pattern. It's called dark cloud cover. It's not quite perfect. We require the open to be above the high of the previous day's trading, and that hasn't occurred, but it with the open at that same level, it is technically a dark cloud cover pattern, and what we require is confirmation of that pattern. We require a candle with a lower high and a lower low. Therefore, the low of this current candle becomes very, very important. In terms of the Fibonacci extension, we're not really seeing much here at the moment. The market is trading through the 261.8% level. Our target is the 423.6% level. We are in no man's land at the moment, and it's not too often that we see markets test up to the 423.6% level, and considering that we're talking about a first time frame uptrend in just based on the series of highs and lows, it really does take a very, very strongly bullish market to trade up to those levels. And the Fibonacci retracement is telling us a similar story here. The 423.6% level is up at 1705, above that round number 1700. We have traded through the 261.8% level. We're in no man's land here at the moment. We are seeing sellers come back into this market, so potential for a change of trend, but certainly not based on what we're seeing with the Fibonacci ratios. In terms of Ichimoku, this market remains bullish in all three timeframes. The market remains trading up above the cloud, and there is potential, as I've mentioned, for the market to find support at the top of the cloud if the market does continue to come off, and if we do see that change of trend. The market is also trading above the Kijun-sen and the Tenkan-sen, and that gives us a bullish market in the medium-term time frame and in the short-term time frame. And interestingly, that Kijun-sen is still pointing down, and doesn't tend to do that as the market's making new highs, but it really says something about the decent downtrend that we saw here previously while the market was making these lows, and it suggests that downtrend previously was very, very strong in comparison to the market making these new highs, remembering that the formula for the Kijun-sen is based on the maximum highs and lows over a period of time, and in this case it's 26 days. There is potential for the market to find support if we do break out down into the cloud and through the window that was opened up. Potential support at the Kijun-sen, which is trading at roughly 1664 at the moment, and then down to the Tenkan-sen, but we're not likely to see that in the next few trading days. More likely that the market will find support around the top of the cloud and perhaps bounce off. Can't preempt the market. This possible that this trend could continue up because the trend technically hasn't changed, but with the sellers having control of this market, it is a strong possibility of a potential lower high and lower low. Looking across here to the Chico span, that's below the corresponding price action, so it's not confirming what we're seeing in all three time frames, and does suggest that this market may trade to lower levels, and then we could see the market bounce back off. We could see a positive Chico span if we remain up around these levels over the next week or so, and then we could see buyers come back into this market. But let's not preempt the market. We're looking for a potential lower high and lower low based on the short-term dynamics and the dark cloud cover Japanese candlestick potential reversal pattern, or for the market to continue trading up through the 1687 level and then potentially to 1700.